This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to the Research Talks here on Stock Box with Alan Green. Well, here we are again, the end of the week. It's Friday. How are you doing, Alan?
I'm very good, Mark. Thank you. Yes, it's the week's gone quickly. Spent some time in London on Tuesday. Met up with my old colleague Zach Meir, which was interesting. So but busy week, and I can't believe it's come around already.
Yeah, it's come around already, but at least the stock market's looking a little bit more interesting this week than it was these last few weeks. Would you agree?
I agree, and I think there is a sense, and we're going to talk about, of course, two stocks in the commodity sector today, two gold stocks, in fact, and there is a sense, I think, that there's a bit of a floor going down because we've seen this malaise in mining stocks over the year, but there's a sense, I think, that a floor is going down, and we are starting to see some stability return, and obviously, one would hope that from here the only way is up.
Indeed, you would hope so. Yeah, indeed. Well, we are going to have a bit of a gold theme today, aren't we? We are covering two companies in the gold space, and that is Katoro Gold and Lexington Gold. And
Indeed.
Katoro we have spoken about before, but it was quite a while. I think Lexington we've covered as well, but we're going to go over them again. As I think Katoro has just recently raised and is seemed to be sort of reigniting itself. So which company would you like to take first?
Let's start with Katoro.
Sure.
So yes, we have spoken about Katoro before, of course, and this is the company that's run by the effervescent Louis Coetzee, who is also CEO at Kibo Energy, and of course his team there were recently involved in launching mass developments onto the market too. So he has a track record of bringing companies to market and finding and developing great projects. So Katoro Gold is primarily about two key projects. The Blyvor Gold Tailings Project, which entails 6 gold tailing dams. It's situated some 75 kilometers southwest of Johannesburg in South Africa, and of course we were discussing this last year and looking about there was an existing JORC resource already in place of 1.34 million ounces of gold at 0.3 grams per ton, and of course since that time the company's gone through various stages of evolution in regard to funding, and now we're at the point where that project's going to IPO. Going to come back to that in a second. Also going to talk about the Heneti project as well. And of course, this is a world-class nickel deposit. This is in central Tanzania. It's a huge area, some 5,000 square kilometers, and it's prospective for nickel, lithium, platinum, and platinum gold metals, also gold too. And that's some 80 kilometers north of the capital, Dodoma, which is in Tanzania, of course. Listeners will recall, of course, that there's a joint venture here between Power Metal Resources and Katoro, and as a result of that agreement, Power Metal now own 35% of the Katoro Gold. They have. They have a 35% holding, in the Heneti project, and that is progressing. Drilling, of course, is underway there, and that project is making steady progress. So back to the Blyvor Gold Tailings Project. There's been a series of developments this year, and the project really has, I think, come back to life as a result of the data that's come back. The CPR report that was, of course, published in Q2 this year, and the CPR report confirmed that the project was technically and financially robust. With 1.4 million ounces of gold, including 500,000 ounces in the measured category, and the project has a net present value of $114 million, with an all-in sustaining cost, that's the cost of production outright, of $861 per ounce. So given where gold is, that's a pretty profitable, that's a pretty healthy margin on top of the the on top of the actual cost of production. The project is estimated to deliver free cash flow of nearly $258 million across the life of the project. And I think we would be probably further down the road with the listing had there not been some delays, of course, because of political unrest in South Africa. And that's obviously, it hasn't thrown a spanner in the works, but it's just simply delayed the progress of the project. So that's continued through the year, and then of course a few weeks back it was announced that the Blyvor joint venture, and that's the joint venture between Katoro Gold and Target Mine Consulting, were to go for a standard listing in London. BV Listco is the investment vehicle. Katoro, of course, are a significant holder in the project. Post the IPO, they will continue to hold 30% going forward, and they intend from the IPO to recover the £1.5 million that they spent on the project development costs. So that's highly significant. That means there'll be a lot of money coming back into Katoro. So it will have covered its costs, got its costs back, and of course a 30% stake in the business going forward. So that's very shrewd work by Louis and the team to get the project to that point. And of course, on the back of that, it was announced earlier this week that Katoro had successfully raised £815,000 at 1p. Shares now trading at 0.95p, just under the raise price, and that's of course coming with a 1.5p warrant. But the raise there is to fund the Haneti diamond drilling program, which of course is shortly to commence. And indeed, Power Metal also put out a statement on the same day, just noting that the raise had taken place, and clearly that's a significant uplift for Power Metal's stake in the project, and of course the fact that diamond drilling, with this huge nickel deposit that's thought to be there, that should give the company a huge uplift. So in summary, I think we can really say that Katoro has come back to life as a project. It's a very simple, easy play to understand. There are the two vehicles. I would suspect probably once the Blyvor IPO has taken place and Katoro retain the stake and they get the funds back that they spent on developing the project and bring the project to date, that they will probably seek out another project in the sector. That's would seem to be the model they have. But of course, the Haneti project could throw up even more potential going forward. So we're at a very exciting juncture, and as we said at the start, Mark, I think we're looking at we are looking at a floor being put down in the sector at the moment, and we've seen relative values. We spoke previously about where the relative values of entry level mining companies, microcap mining companies, seem to have gone up. It now seems to have come back down, and we're looking at Katoro, just raised £800,000, and it's got a market cap of 3.6 million. What's that about? There's a project there's a project that's coming to market, that's developed, it's gone through all of the phases it needs to go through. There's a JORC resource in place, a net present value in place of $114 million, and it's got a market cap of 3.6 million. So at some point, the valuation realization, or the valuation gap, I think is going to be closed. There's no doubt about it.
Indeed, because they seem to have be slightly quiet for a little while, didn't they? It seems certainly that way to me over the summer. But now, as you say, they've got 3.6 million valuation, so not very high. Raised 800,000, and it just seems like, I don't know, life's coming back into the old girl, and that's a lot of firepower they can go and use. Do you have any idea what the kind of where it might be used, or what the inflection point might be here?
Well, I think the inflection point has to be the IPO, and the thing is, of course, we've seen this with other companies. I mean, we spoke about Poolbeg Pharma last week, and I interviewed the Poolbeg team on Monday, and of course, Poolbeg since the IPO, it's held up really nicely, and it's also supported the spin-off parent Open Orphan. It supported their share price too. So I think as with Power Metal, there are a number of IPOs scheduled to come to market there. I think with the Blyvor Tailings IPO coming to market here, that will put a floor under the Katoro share price for sure. And of course, it'll bring another $1.5 million cash into the company as a result of the IPO. So with the $815,000, that's something like 2.3 million cash in the company. So I think at that juncture, obviously it'll be invested into another project or projects. But I think at that juncture we should see a significant uplift in the share price for sure.
Is there an estimated timeline to IPO? Do you know?
Well, it was delayed. We're going to hear about it again on the 30th of November.
Okay.
So I think we'll know more at that point. But certainly that there was a delay in receiving some of the documentation back from Target Mining as a result of the political unrest. So it's now been delayed. But I think there's a very good chance that they could get this way before the end of the year.
Okay. Excellent. Okay, well, from one gold company to another, Lexington Gold now.
Lexington Gold. So again, we've spoken about Lexington a little more recently, but this is a company with a great management team. Of course, it includes Melissa Sturgis as a non-exec on the board, and Melissa, aside from Ananda Developments, is well known for taking positions in recent mining resource companies. She was involved in Aquarius Platinum. Ed Neelan, the chairman, 46 years experience, also founder at Aquarius Platinum and Sylvania Platinum. And Bernard Olivier is, of course, the CEO, 13 years experience with Tanzanite One, and was involved in Besant Resources, bringing projects to a JORC resource estimate of 3.9 million ounces. So lots of good work there from the people involved. So Lexington changed its name at the end of last year from Richland Resources and took ownership of 4 gold exploration projects in South Carolina. South Carolina is, of course, a prime location, given the infrastructure that's already in place there, the support services. It's a very mining-friendly environment, and a lot of historical success in the area. That one in particular is noteworthy. The Haley Gold property was developed over several hundred years, and it wasn't really until the 2006-2007 that things started to move, when a company called Remarco came in and developed the property and applied modern mining techniques, developed a gold asset there and sold that to Oceana Gold in 2015 for just under $1 billion, in fact $856 million. So that was a huge uplift there. So we've got the Haley asset of 4.5 million ounces. Other ounces, the Ridgeway asset, 1.5 million ounces of gold, that's owned by Rio Tinto, and the Barite Hill deposit, which is 600,000 ounces. And of course, the Barite Hill is close to the Jennings Pioneer asset, which is one of the 4 gold exploration projects owned by Lexington Gold. So firstly, we have the Jones Keystone Lofton, the JKL assets, which involves historical gold mines across 2 areas. Historical grades there were very good, 5.5 grams per ton, best grade from Jones Keystone, and the Laughlin project was 4.1 grams per ton. There's also the Carolina Bell asset as well, which combines the Iola and Uwara listed mining areas. And again, historically, those 2 mines have well-established assets. Iola at 45,000 ounces of gold, Uwara at 5,000 ounces of gold. Finally, we have the Argo project, which is a drill-ready asset with multiple small historic pits over some 400 acres, and the best grades from there historically were around 12 grams per ton. So so there's a lot of history there. The company came straight in and started work on the ground early this year. Undertook some drilling work and some survey work. And I won't go through what announcements and developments from earlier in the year, but really starting middle of the year, the company announced that the phase one drill results from JKL were very solid. 3 of 6 diamond drill holes that came back, they had the results back from, showed high grade gold mineralization above 100 meters in depth. So that's really low cost, because we've got obviously 100 meters in drilling terms is nothing at all. They over 35 meters, they saw a consistent return of 1.57 grams per ton, which is a very strong reading. And over one area, 32 meters, 9.5 grams per ton, which is so that they've established there that there are broad zones of mineralization, and obviously have scheduled on the back of that a phase 2 drill campaign. Then we go through the summer, and in September the company published a half-year report and announced that it was undertaking a further 5,000-meter reverse circulation drilling campaign, both at Jones, Keystone, Laughlin, and Carolina Bell, kicking off in September. And the Carolina Bell, the company announced it had completed some airborne magnetic survey work and had identified 2 anomalies, which the company will be examining with soil sampling and trenching. And this is in addition to what they've already established there. In November, a week or so ago, we had a drilling update from the team on the JKL asset. 17 holes completed at Carolina Bell. Sorry, not JKL, the Carolina Bell asset. 17 holes completed across nearly 1,300 meters out of the 5,000 meters total scheduled. And they've pulled some very encouraging samples out of the ground, which have been sent off to SGS Vancouver. There'll be an 8-week turnaround there, so we'll have those results back, I'm guessing early January. So that should be, if the results are good, that'll be a great way to kick the year off. So there's a lot of activity over all four of the assets owned by the company, and certainly the indications are, again, with Lexington Gold, we've got I think because of the history at the assets and the existing gold mines that are in place, it's well accepted that the gold grades would be there anyway. But I think proving out with the drilling work should see the share price power on as we go into 2022. The company is currently trading at 3.2p. That's giving it a market cap of 8.3 million. Traded as high as 6.4p, and of course that was on the back of some of the results early this year. So it's just drifted back in line with resource stocks in the market, and I fully expect that once we get these assay results back from Carolina Bell in January, that we should see the share price start to pick up again.
Okay. And what about the price of gold then, Alan, with this being a gold-themed podcast? You've been keeping an eye on that recently?
Yeah, I mean, the gold price is it's fairly steady, isn't it? I mean, so we come back to $1,620 an ounce. So there's been a drift back, but I'm still very much of the view. I'm a gold bull long term, and I also I'm still convinced that we are in the middle, or even right at the start of the post-COVID commodity super cycle, History has told us on numerous occasions that following such great earth-changing events such as World War II and other events, that there is the disruption created by these global events and the rebuilding process necessary leads to a boom in commodities because of the demand for reconstruction and everything else. Now, obviously, the world hasn't been flattened as a result of COVID. Everything simply stopped working. So in the developing nations like China, of course, and also bearing in mind that we have this Biden infrastructure bill of $1.9 trillion to be spent in the US, that's a huge amount of commodities that will be required to fund and drive that. So I'm still convinced that the demand for commodities will steadily increase. We're going to see the prices ebb and flow as we've seen this year, but I think all the factors are in place. The major developing markets basically stop for a year, so they have a year to catch up, and that in itself will be a driver for some years to come.
And you think that's bullish for gold then?
Yeah, I do think it's bullish for gold because when companies search for gold, they'll continue to search for gold, and they'll also find other metals too. Invariably you'll often find copper and gold together. You'll find copper, silver, and gold together, and that's what can initially be a byproduct often turns out to be something that offers much greater value in the longer term. But I think gold itself is always a store of value when you have this uncertainty, and there's a lot of money, don't forget, that's gone into crypto as well. We were talking about this last week. Will decentralized finance, will crypto and NFTs retain the values that they have currently? Will it power on to new highs? There are some gold-backed cryptos, of course, out there as well. But if there is another major correction, then gold has always acted as a safe haven, and if there is a sell-off, then I think a lot of that money might just go back into gold. So I don't see gold sort of. I see gold consolidating in the moment, and we could. Well, I think it's highly likely that we'll see it push back up to close to $2,000 a ton.
Yeah, so it's around sort of 1850 now, isn't it? But it seems to be consolidating around that price. It does seem maybe it's the new baseline. I don't know, but it's always good to have some gold in your portfolio.
I just realised I gave you the gold price in euros. Yes,
in euro. I thought, 60. I was thinking that's a bit low. What are you looking at? But euros and $1850. Yeah,
$1858. Currently, but I think $2,000 has always been the benchmark, and I'm very confident we'll see it push back above that probably by the end of quarter two next year.
Okay, there we go. Well, thank you very much, Alan. You certainly presented some good and bargain investment propositions there with Katoro Gold and Lexington Gold. So thank you very much for your time. Enjoy your weekend, and we'll speak again next week.
Thank you, Mark. You too. Have a good one.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.